Affordable housing was a dominant theme in yesterday's fiscal update, with the government announcing a total of $6.3 billion in new housing-related initiatives in spending since the previous budget in the spring. The fiscal update, however, though, did show an effort to restrain program spending in the near term. Only 30% of the overall $20.8 billion in net new spending would be slated to begin before 2025. And that includes some of the housing measures. Those aren't going to kick in until a little later. So what does it mean for Canada's housing supply in the near future if some of these measures won't come into effect right away? Let's bring in Robert Hogue. He's an assistant chief economist with RBC for his perspective on this. Robert, thanks so much for joining us.
Yes, thank you.
So two of the big headline efforts out of the fiscal update when it comes to housing is this $15 fund for loans for building rentals, and also a $1 billion fund for building more actual affordable housing. I wonder what you make of those dollar figures, of what they're going to be able to do when you're thinking about the supply that's needed in this country.
Right. It's actually $15 billion of new loans. No, you said $15. That's what I heard. But anyways, no,
that would
these
not
are
be
fairly,
nearly enough.
Right. And these are fairly significant numbers here. And we have to be mindful here that they are additions to existing programs. So that's why when you're saying those are kicking in a little bit later in 2025, 26, it means that existing programs have been increased to last longer. So those programs are already in place. And in fact, in some of those loans, when you talk to some of the developers, are welcome. Those loans for the rental, new rental construction, I think are being used and are contributing to address, especially in the shortage in the rental space. So now we are now pleased to see that the focus has remained on the supply side. I mean, I'm sure there's lots of temptation here to add various programs to grow home ownership or to help Canadians jump into the housing market. And as well intended as those programs could be, I think that they were just in the context of being constrained supply. They probably would not have been overly constructive. So really our view has been all along that we need to focus on the supply, to grow the supply, to remove obstacle to new construction. And I think this is what the government's saying. And to be fair to other levels of governments, I mean, they're them as well. The focus has shifted, and now I think we are hopefully on the right track to get some improvement over the coming years. But that being said, I mean, let's not expect here a very quick improvement. That this is the supply side will take time to have its full effect.
Well, even between the two of these, you mentioned that there are additions to other loan programs, but this additional spending or additional money being made available, whether it's for the loan side of things, would only add about, less than 40,000 units or homes to the market. And when you're thinking about the supply gap, that's a drop in the bucket, perhaps, Robert.
Right, but those would be very targeted to units at the affordable end, right? Because at the same time you still have the constructions taking place on the in market housing,
right?
That other measures will help address, removing, expediting the affordable housing accelerator fund that we've seen.
Yes,
a lot of announcements in over the last few months. That fund was announced back in the 2022 budget. Now those monies are flowing in and hopefully will help expedite processes at the municipal level. But clearly, I think with those numbers of new units really solve the problem in short order, or probably not. But they are definitely steps in the right direction.
Yeah, it doesn't mean that it's not worthwhile. That's for sure, Robert. Especially when it comes to those the co-op and the public housing component, the $1 billion for that. What about this crackdown on profiting from short-term rentals? So this idea that people who are operating their homes or units or what have you as a business and as short-term rentals not being able to expense or to claim expenses, rather, when it comes to tax time on those rentals. How big of an impact do you think this could potentially have?
Well, that's actually a very interesting measure, right? Because it's a way for the federal government to help municipalities enforce the rules. So basically, what the federal government is saying is that for those operators of short-term rentals that are using this as a business, as you just described, and not necessarily renting a room in their primary residents, that the federal government will help with the enforcement, either transferring some monies to some of the municipalities, but also from a tax perspective, not allowing expenses for those operators operating in areas where those short-term rentals are being prohibited. So it's I think, a crafty way for the federal government to lend the support to municipalities. But this is one of the many measures that have been put forward over the last a little while here to crack down on short-term rentals.